So this track is called Kasari Solo and also came out on the Good Food EP. I was truly like what you're hearing. We go check out the whole project. So I'm gonna leave you with the last couple of tunes. It's been fun. It's been real. Thank you so much for staying with me the whole 2 hours. Let me know what you thought of the show. This was show number 603 once again. Myself, Hagen, signing out.
Future beats, eclectic soul, God gems, and timeless sound. Brought to you by Joe K. Zero Selection Radio. I got something to say, baby. I think I should know. You're doing wrong. So don't worry about the situation. Yeah, boss. Should go. And you, if I go there, fucking days. Can you, can I go there? We don't stand in love. We don't stand in love.
Check, 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 check. Mic check. 1, 2, 1, 2. Mic check. Oh, y'all can hear me. Okay. Oh, y'all ready? Did you guys get some good food at least in downtown Seattle? Was the food decent? Was it good? It was all right. It needed some Old Bay or I mean I mean it probably had some slap your mama on it, but Old Bay might have been missing. By the way, did anybody take me up on my Toulouse Petite Kitchen recommendation? Show of hands. Toulouse Petite Kitchen restaurant. Oh, see, that's the problem. All right. Show of hands. How many of you guys were at the Founders Bash last night? Did you guys enjoy the event? All right, bet. All right, so we're gonna give people a little bit more time to fill in because people were like, "Hey, don't leave me behind." So, don't be late. But yeah, we're gonna get started in a little bit. I'm really excited for this next event that I'm getting ready to moderate. It's kind of interesting where we go from me moderating my trader / investor side to now coming back over to me moderating the other world where I've made my bones in, which is startup and investing. So it's going to be kind of fun just to sit down and talk to folks that are within the industry and also be able to ask them questions that, I'm probably sure that you would want to know or that you wish somebody would have told you. So we're going to get started probably in the next 3 minutes. But yeah, but y'all feeling good? Nobody's tired, right? Oh, you tired? You tired? Wait, if you said you tired, raise your hand. All right. See, look at that. And see, you asked me to go 100%. See, look at that. See? Oh, the time you getting that jet lag? It's a real thing. Going from East Coast to West Coast. Shout outs to the folks who also traveled in from overseas as well. How many people traveled in from overseas? Show of hands. Shout outs to y'all. I think we got Netherlands in the room. So yeah. All right. So this is going to be fun. Feel free to take your seats. I'm just just buying the time for folks to just fill in. Yeah, as you're coming in, just let's get our seats. Let's get our seats. But yeah, I'm really excited for this event. And as we keep going today, all right, so let me ask you guys this. If you were taking notes, how many pieces of okay, just everybody just raise your hand. Just raise your hand. All right, everybody raise your hand. All right, if you've already wrote if you only wrote 3 notes, if you only wrote 3 pages, drop your hand. All right, if you wrote 4 pages of notes, drop your hand. If you wrote 5 pages of notes, drop your hand. If you wrote 6 pages of notes today, drop your hand. And if you wrote 7 pages, then your certificate is in the mail. Congratulations. Nah, but like, I hope that you guys are getting good information though, right? All right. So it's been invaluable. Like, you know, the stuff that you guys can move forward after the summit is over, you guys can go and execute it on Sunday or Monday, correct? Okay. So that was the ultimate objective here for this year, was so that way you guys would receive information, and from the information that you get, you can literally start to go execute it immediately. By the way, shout out, show of hands. Did you guys all get the email from the Eventbrite that gave you access to the Bolt? Y'all got that? Did y'all check your email? Did you check if it should say from Eventbrite, or it should be from startups at fromtheculture.co? All right. Well, you know, if you didn't get it, we'll send out another blast for you guys to have access to it, because it gives you a full month free. So that way you guys can do some pretty cool things. Okay. All right. So I think that everybody is now like filled in. I mean, if somebody can, okay, you guys want to play a joke on somebody real quick? The next person that comes back in the door, all of us just look at him and just clap. Here he is. Here he is. Here he is. You don't even know that we're clapping for you. Yeah, we clapping for you. Okay. All right. Let's get it going, because time is money and money is time. And like I said, the more you learn, the more you. All right. So let's get it started. All right. So we got coming to the stage. We got a few managing partners that I'm going to be sitting up here with. It's actually pretty cool because all 4 of us will be managing partners across different arenas, especially different investments. But we got 4 individuals that represent the venture capital world that do some pretty dope things, invest in some pretty cool things. We're going to get into, like, you know, their ideas as it pertains to their thesis. What is it that they're investing into? Also giving you guys some of those hard-nosed truths that I think that a lot of times that you miss, or that nobody is willing to tell you. These individuals definitely have the courage to be able to stand forth and tell you the truth, even if it may not be what you want to hear, but it's always what you need to hear. So that sound good? I also want to give a shout out to our sponsor, Wilson Sonsini, because this event specifically is sponsored by Wilson Sonsini, and shout outs to Eva from Wilson Sonsini. Just one. Shout outs to Eva. No, we're clapping for you. All right. So we're gonna bring up Kirby. We got Vivek and we got Pablo. Gentlemen, welcome to the Fireside Chat. Thank you so much for joining me. Vivek, Pablo. All right. So I'll give you guys a quick softball. I think this will be the only softball today. So we're going to go through the line. We'll start with you, Pablo, and then we'll work our way this way. All right. So just introduce yourself. Tell us, you know, about your firm. And also just quickly, how did you get into venture capital?
Absolutely. Thank you for having me. And congratulations on getting such a great turnout. Woo, yeah, give it up for yourselves. So I grew up in Miami, 2 immigrant parents, went up to University of Florida. And while I was studying there, I was trying to build my first company, but there was no ecosystem there. I was looking for mentors. I was looking for investors. I was trying to learn. And so we started hosting meetups and workshops and roundtables, because I saw a lot of other people who were trying to learn. And we ended up building one of the largest tech communities in the Southeast United States. And then 3 years later, the pandemic hit, and it forced us to cancel all of our in-person events that we were doing. So we quickly pivoted. We ended up launching an accelerator program over Zoom, basically like a 10-week boot camp helping companies raise money. And in 2 years, we helped 40 companies raise over $13 million, and one of them got acquired. And while this is happening, we're thinking to ourselves, okay, how do we get equity in these companies? Because right now we're not getting anything. So we go to the VC firms that are investing in our companies, and we said, hey, can we get a scout fee? And they all said no. So we said, all right, let's just raise our own fund. And, you know, it was obviously brutal. We were 26 years old, never worked in venture before, never managed money before. We sold our cars to start the fund. And yeah, today we're managing about 5 million. We've made 28 investments, and we're getting ready to launch our second fund. But going back to that original DNA of how we started, our core differentiator as a fund today is that we host highly curated programs and events all over the US. So this year, we're going to do over 70 events in over 12 cities, helping founders learn how to raise money, helping them connect with investors, helping them meet customers, and helping them get to that next level. So that's 161. That's how I got into venture. And thank you so much for having me.
Oh, let's go, Vivek.
What an incredible story. I feel like every VC just has a unique path to it, and Pablo's is maybe one of the most inspiring.
Thank you.
I grew up in India, started my career accidentally as a founder. I was in computer science, started to learn how to write video games, and turned into a video game company, which I ended up selling to GameStop, which is maybe a story for another day. And then started a second company, which was a stock exchange for private companies, which ended up getting acquired by the NASDAQ. And that's when I didn't know what to do next. I took some of my small proceeds from that and started to build a little bit of an angel portfolio. So I started to invest a lot, like how what Pablo was saying. Met a lot of great founders, didn't know what to do with it, so started to invest first out of my own money. Built a little bit of a track record that allowed me to go raise a fund. I've now been investing for I've been fund investing for about 13 years. At PSL Ventures, we invest really early, and my thesis behind investing is investing in great people. So all I look for is investing in people that I think are going to be incredible founders, which can mean a lot of different things, but want to partner with founders as early as possible.
Thanks for having me. And good to see some familiar faces from last night out in the crowd. Thanks for coming through. So I'm Kirby Winfield. I am the founding general partner of Ascend Venture Capital. That's ascend.vc. We are on our third fund, investing in inception stage enterprise AI startups. How'd I get here? It's a much less interesting story. I was born in Seattle. I didn't have to go far to get here. And but I did grow up thinking I was going to be, this is silly. I thought I would write like the next great American novel. I went to college to be a writer, and I don't think I took a single math class. I certainly don't have an MBA. And when I graduated, I realized that writing wasn't going to pay enough money to live in New York City. And then a friend of mine called and said, "Hey, why don't you come back to Seattle? We're doing an internet company." And I was like, "What's that?" Because it was 1996. And I was just very fortunate that I'd done some writing for my friend.
But we got somebody's phone.
And it's
going on.
yeah, I don't want to floor.
She's trying to find the phone. Okay.
That's right. It's like if you see something, say something. We all saw this phone sitting there. We didn't say anything.
Brain in danger.
We're just like, that's probably there for a reason.
And we're glad that you found it.
All right. Anyway, I was going on too long anyway. I came back, helped a friend with a startup. We took it public in 1997. We sold it in 2000. We did another startup in 2003. We took it public in 2004. And then I did two startups as a founder, raised venture for both of them and sold them, much less successful. And I realized I wasn't maybe cut out to do that job, but I thought I could help founders. And so I started investing off my own balance sheet, helped launch the co-founder of Microsoft's incubator at the Allen Institute for Artificial Intelligence, and then launched a fund in 2019. Second fund 2022, and currently on the third fund.
No. Okay. So you guys ready for me to rip the Band-Aid off?
Let's go for it.
Rip it.
All right. What are traits in founders that you do not want to invest in? I told you guys.
Say that again. What about founders?
What type of founders do you not want to invest in?
I think of founders in two buckets in terms of what I don't want to invest in. Founders that move mountains and bend reality and are a little bit delusional about what they can do. I want to invest in those kind of founders. I think the other bucket of that is founders who are a little bit too timid. Accept reality, wait for the world to come to them, wait for getting permissions. They may be incredibly skilled, and a lot of people are incredibly skilled, but I think to be a founder, and certainly a successful one, you have to break a few rules. You have to bend a lot of rules, and if you are not comfortable doing that, I don't think you're cut out to be a long-term successful founder.
I mean, I'll say there are lots of answers to this question, but one thing that came to mind initially is just I don't like backing planners.
Say that one more time.
I don't like backing planners. So people who have the biggest red flag certainly in a venture scale technology startup pitch is someone who walks in with a business plan, because we all know that, what do they say? Everyone's got a plan until they get punched in the face.
Shout out to
Mike Tyson.
So we just see it over and over again. It's not the plan that matters. It's the learnings per dollar spent. It's the execution against the vision. It's going and having violent contact with your customer and your market and learning and iterating. And if you walk in with a 3-year revenue plan and you're like, well, I'm going to hire these people. I'm going to raise $1 million. I'm going to hire these 4 people. They're going to do these specific jobs. That's going to yield this many sales. I'm just like, dude, you don't know what you can price your product at. You don't even know what your product, who's going to buy your product. Like, you have a bunch of theories. So that's great. But then what we like is when you have theories about the world and you go and test them, you learn from them, and then you hone in and you start to get traction, and then you get product market fit. And then maybe, yes, time to make a plan, but don't start with a plan.
Similar to what Kirby was saying, I think a founder who doesn't have a strong sense of curiosity, I think the whole premise of building a startup, like he was saying, is like you have a hypothesis, right? There's a problem in the market. We have a solution. Let's see if the market is receptive to my solution. And then if not, we're going to iterate, right? If you have a strong sense of curiosity, you're going to ask the right questions. You're going to be open to learning, and you'll be able to iterate quickly. So you have to be a quick learner. I think like the biggest red flag is when we have a call with a founder and they spend 25 out of 30 minutes just rambling or pitching a deck, right? Because it shows like you really just spent 25 out of 30 minutes just telling me about your company. You didn't ask me a single question. You didn't ask me anything, right? It doesn't give me confidence in the founder's ability to build a relationship or to learn. Some of the best founders that we talk to, they get their pitch done in like 2-3 minutes, and then they start asking a lot of questions because you can tell like they're trying to learn. So I think curiosity is really important.
Okay. So switching gears for a quick second. So as we see that we massively gone into this realm of AI, and AI has literally been a part of on the tip of everybody's tongue for, let's say, quite some time now. Based upon thesis, because I know that all firms' theses are not the same. What is it that you specifically, or what are the things that get you excited? What type of ideas are you looking at within the AI sphere? Because we see there's a lot of ideas, but which ones scare you? Which ones excite you? Or, are there any ones that you say, okay, hey, I wish somebody would build this and bring it to my desk that hasn't been brought to me yet?
I mean, I think I've got a kind of a broad answer, and maybe you guys could be more specific, but for me, there's just 2 kinds of AI companies. There are AI companies that solve problems that couldn't be solved for AI. And that could be because they were too expensive to solve and the yield on that investment wasn't worth it. And then the second type of company is solving problems that have been created by AI. And that could be anything from deep fake detection to infrastructure, where you need to securely and safely, implement large language models as a Fortune 500 enterprise. But that's kind of how I cut it. There are 2 classes of problems that just didn't exist 2 years ago, and that's massive market potential.
Maybe I'll take this in a slightly different direction. For me, I'm looking for founders who have a point of view and a real opinion about an industry that they can start with, and then certainly have the personality to be flexible on that. But if you don't have a real sharp point of view and you're trying to do something too broad, that is just not appealing to me. I think those kind of businesses really struggle to find product market fit. And I think to have product market fit, you need to have a really sharp and narrow product. And founders who have that really sharp and narrow vision to start is something that I look for. But for me, even more importantly, I truly mean this, I don't back ideas or companies, it's very much about the people. So if the person, I think the question I'm asking myself when I meet every single founder is, would I go work for this person or not? And if the answer to that is yes, I'm investing in them. If the answer to that is no, I'm not investing in them. Doesn't matter what they're doing.
Go ahead, Pablo.
Similar to Vivek, like we like to bet on people. So there's not like a specific sector, but if I had to pick one thing within AI, I would say infrastructure is what we're interested in. You know, like Seattle's a town that, you know, really took off during the gold rush, you know, 150, 200 years ago. And, you know, Klondike gold rush. And so the people that really made money in 1849 was not the people who were rushing out west for gold. It was the people who were selling the infrastructure, right? The picks, the shovels, the Levi jeans. And that's what we're trying to back for AI. So who's building the infrastructure that's going to allow these AI applications to run most efficiently or most effectively, and just make it easier to deploy. So those are the things that we're really interested in. But like Vivek says, I mean, we're investing in companies that are not AI related. We're just betting on people.
Okay, so let's dive deep here, because I think that a lot of times that it gets misstep, where a lot of folks, and I remember speaking at an event before, and one of the things that I realize is that people understand their business or maybe as their startup, but they don't understand the business of venture capital when they come and ask for a check. So I think it's time to get real with people. You guys want us to get real with y'all, right? Okay, so like for example, and I'll lay out the scenario. Let's say that a startup is raising, let's say, 5 million for a seed round, and they're coming to you as like their lead investor. Explain to them the process behind that, of what that means to, like, what that check means, that process of that check, what it means to the fund, you know, that process. Because I think that like the more that they understand that part of the business, then I think that it kind of like paints the whole stroke of the painting. I was gonna say I want to them all y'all.
I can start. Yeah.
We want all.
So I think the important thing to understand is like the math behind a fund. So as a VC, every investment that you make needs to be able to return your entire fund. And typically it's somewhere around like 100x. The reason for that is because 20% of your fund is going just to fees. And then there's like another probably 2 to 3% that's going to fund expenses. And then you've got to give 20% carry to your investors. And then there's also a lot of companies that are going to fail. So maybe you make 30 investments, maybe out of those 20 don't make you any money, or 25 don't make you any money. So you need those 5 to make you a lot of money, right? So when a fund is backing a company, they're like, can this be worth 100 times more than where I'm investing today? And does this team have the ambition to take this company, right? Do they have the grit? Do they have the perseverance and the passion to stick through with this for the next 10 years, no matter how hard it gets, and really build it up? I think like that's super important when you approach a VC to keep in the back of your head.
Yeah, I'd say I was a founder and I didn't understand this, but if I found a company and I raised $5 million, and let's say I raise it at like a $20 million post-money valuation, and then, I probably still own, if I'm a solo founder, I probably still own like 75% of the company. Maybe my team has 5%, I own 70% of the company. If I get an offer to sell my company a year later for $60 million, I take that and I feel really good about it, right? Because whatever 70% of whatever's left on the table after I pay my investors out, it's life-changing generational wealth. But if I'm the investor in that deal, I'm not happy, because if you can sell that quickly for that much money, it means you're onto something. And I would rather I need you to go shoot the moon for a $5 billion outcome or die trying. You doing this does not help my fund. I mean, it's better than nothing, trust me. And I got a couple of those better than nothing exits. And I found out from my investors, they were like, well, I mean, that's nice. But I thought I won, but it wasn't a win for them. And that's the thing that I've learned sitting on the other side of the table is just, it's different depending on our fund sizes and the ownership that we have. And but it's basic math. If I've got a $25 million fund, and my investors expect me to return 5x net in 10 to 12 years. And I own 5% of the company at entry, and it gets diluted to 3%. And then the total outcome value that I need, was 3% of 10 billion, with 300.
Yep.
So that would be a hell of a fund, right? That'd be a 10x fund. So 5 billion. Okay. Now it's a 5x fund. Still very good. Still top 1% of venture. Cut it in half again. 2.5 billion. Now I'm a 2.5x fund. That's worse than the S&P does in 12 years. So $2.5 billion isn't enough.
That's a big exit.
That's what you're up against. Yeah.
And the reason it matters too is, like, I think what Pablo was saying is the venture is very much a power law business, in that across history for most funds, one or two companies or very, very small handful of companies in the portfolio drive majority of the returns, because it's so risky. Most of the companies are going to die and be close to nothing. So you expect your winners to drive that. And I think this is the thing that founders really need to understand, because so often, and more often than not, venture capital is just the wrong source of capital for most founders. For what Kirby just described, you could have a $60 million exit, which is life-changing for you, and your investors are going to be extremely upset. And so venture capital is not the right route for a vast majority of founders. And you should, VCs are building a portfolio, that they don't take the same kind of risk that you as a founder do. Well, everything you have is in one company. We are investing in a portfolio of 25, 30, and in some cases more companies. And so our risk is extremely diversified, and we just need each one to be a home run or nothing else. And for founders, that's not necessarily the right fit always.
Okay, so one of the things that I typically also tend to notice, especially for startups that are getting out the door, a lot of times they struggle when it comes to just meeting investors. Just getting to the right person, walk them through that, because a lot of times they're just gonna they see venture capital or angel investor attached to your name, and it's oh, well, you're an angel investor, VC investor, I'm gonna go talk to you. What are some of the things that we can help the people in the room understand as it pertains to, one, approaching an investor, and then two, finding the right investor?
Maybe I could take the first part. There are people who vocally, loudly disagree with this assertion, but most people in our seats would agree. We just want warm intros. I get, I'm sure these guys get similar, but I get 200 cold emails a week from people all over the country looking for investment. I can't even read them, right? So there has to be a filtering mechanism, but it's not just about filtering on volume, because you could use AI and get better at that. It's just a very basic test of your skill as a founder to be able to talk to customers, to be able to hire talent, to be able to secure investment. If you can't find a way, by discovering, look, I've made 90 investments over the course of 6 years in the fund. Those companies have employed thousands and thousands of people. I will talk to anyone who gets introduced to me by the employee of a company I've invested in. And every VC probably feels the same. If you can't find one of those people to get an intro, how are you going to find your pilot customer? How are you going to find your first 10 customers? How are you going to hire people who aren't in your network? That, I think, is the rationale for wanting warm intros, besides VCs just being lazy, which, a lot of us are too. But
Right. Yeah, I don't think it's laziness at all. That's spot on. And I think most people sitting up here would say, hey, I respond to everything cold, and that's just not true. So yeah, you've got to find some way to stand out from the noise. And the second part of your question, I think, is a lot of what Pablo was talking about earlier, is you've got to be interviewing the investor as much as the other way around. You've got to be asking questions of them and learning about them as much as they are about you, because it's a two-way partnership. And if you get funded by the wrong investor, that could be death for your company as well. So
I'm sorry to jump in, but I always say this: investors generally aren't going to be able to make your company successful. but they can definitely kill your company.
And so create optionality. Don't rest on getting one investor in. Try to create optionality. Try to get 3, 4, maybe 5 investors wanting to invest in you, so you can pick which one you want and drive a real full process. And like Pablo said, really engage, be curious, and judge the investors as well. Get references, talk to their founders, and learn about what they are like as investors on their cap tables.
Absolutely. Yeah. And, for us, like we had to learn this on our own too, because like we didn't come from a network of high net worth individuals and like rich families. Like my partner grew up in a really rough neighborhood in Cleveland. I'm from South Florida, definitely not a tech hub. And I think like when you really look at it almost like a machine, it's like there's 2 parts of this equation, right? One is like, how do we get more qualified leads? So how do I meet more investors, right? And there's a lot of ways to go about this, but I think most founders that are trying to raise money, there's no strategy behind it. There's no process behind it. And part of it is like, it's fair. Like nobody teaches these things. Like you have to just learn it by doing it. And most people raising money are doing it for the first time in their lives because again, you only learn by doing it. So that's one is like, how do I get to meet more of these people? And like, we had to figure this out on our own. And for us, it was like hosting events. And we were able to meet a lot more investors by hosting events and getting out there and attending other events as well. So like being out in a room like this is a good opportunity, right? And then the second part of the equation is how do you increase the conversion? How do you get more of these? Because most of them are going to say no, but how do you get maybe 10% to say yes versus just 1% to say yes? And then that's really a function of like having a good business, having a good pitch. So you have to be also working on the company and like getting traction and like making things happen, learning quickly, iterating. So it's a lot of moving parts. It's a lot of things at once, but the fundraising process is ultimately those 2 things. How do I meet more investors and how can I convert more of them? And ultimately you can get there by, I think, learning very quickly and moving very quickly and like asking the right questions. When we were starting our fund, like full disclosure, we literally reached out to we had 60 meetings with other established GPs around the US, just general partners, just to meet them and learn from them and ask them all kinds of questions. Like, how did you raise your fund? What's your background? How do you meet investors? Like, what is your pitch? What's different about your fund? How do you put together, like, how do you do portfolio construction? Like, we didn't know these things. We read a bunch of books. We did like 3 programs for emerging fund managers. But the key thing is we were just trying to move very quickly and learn as much as we could. And ultimately, after we had a really rough period, which is actually like when I first came out to Seattle, like I met you like when literally like 2 months after we launched a fund, and we went like 9 months without raising a dime. And we're like, I honestly think that when your back's against the wall and you're like super determined to figure it out, that's when you have the best ideas. And for us, 9 months of raising no money, we had already deployed the little fund that we'd raised $500,000 to date. And we're like, we need to start hosting events again. We need to, instead of telling people what we're going to do, let's show them. And that changed everything. We hosted it within 5 weeks. We hosted a massive event. I didn't sleep for a month. We raised like $12,000 in sponsorships. It was a Gainesville Tech Week. It was a full tech week. We planned every single event, 7 events across 3 days, brought in speakers from all over the country, and immediately started to get investors. But again, this is like banging our head against the wall over and over again and just like trying to figure it out. So I would say like look for mentors, look for people who have done it before, reach out to people just to learn, because a lot of people are willing to help, right? And try to find an angle there of like, maybe this person came from the same hometown as me. Maybe they went to the same school that I did, because that's what we did. We originally, all of our initial investors were University of Florida alumni. Like one of our first investors was actually the Gatorade family, which Gatorade was invented at University of Florida. That's where the name comes from, Florida Gators. So try to find people who have that, similar lifestyle, that came from a similar background, because you're going to have a higher response rate there. And then shoot some moonshots. Like when I first came to Seattle, I cold emailed Kirby, and he's like one of the most well-known investors in Seattle. And like, he took a meeting with me from a cold email. So I think like there's a lot of power in that too.
I think also to kind of build on that, a lot of founders don't realize the advantage they have in whether it's their work experience or the problem space that they're in for finding angel investors. And look, we love angel investors on the cap table before we come in. I mean, we'd like to be first as well, but like if it's not obvious, it really helps when either your skip level boss at the last company you were at is invested in the company. That's an endorsement of you. Like, again, we're investing in people at the end of the day. If the people around you and the people who have worked with you want to support you, that says a lot. And also if you're building a startup in the home services space, go talk to the 20 top HVAC and plumbing and carpentry and whatever, providers in your city, and just get them to invest. You get hung up on the money, but the initial part of this is not about the money. It's about signal. So if you can get, $5,000 from 20 service providers, and you're building a software solution for service providers. Okay. Now as an investor, now I'm like, oh, well, okay. Cause the question that we always have to ask is, does anybody care either about this person or about this problem, or both, hopefully? And so there are ways that you probably have access to start to answer some of those questions before you talk to a more institutional investor.
So let's stay there for a second. So outside of money, right? What do you guys typically see as one of the biggest challenges that founders face? See, I told you I was going to challenge.
I mean, okay, it's almost never the product. Like, people fall in love with the product or the technology, but the companies we see fail have products and technologies that work really well most of the time. And we're backing technical founders, and we don't like underwriting, technical risk too much. But it's go to market. It's people just can't find the match of a problem that's important enough and urgent enough and a person that has that problem. It's really simple. Like that is the biggest challenge we see founders face.
I think that's universal across the board.
Yeah. And I guess put differently, it would be product market fit to some extent. It's not the product, but did you have the ability to solve for the real problem that customers care about? And I think that requires a lot of listening to customers, talking to a lot of customers, and I think just getting to talk to enough people is really hard. A lot of founders get trapped there's a book called The Mom Test. A lot of founders get really trapped in talking with their friends and family and your moms about what you're working on, and you're always going to hear good things, and that doesn't really help refine what you're trying to build or solve for. It's talking to real customers with wallets who are going to pay for it.
Okay, I got to ask you guys, as gentlemen that manage funds, what's the one that got away?
Oh, that's easy. That is easy for me. I was at Bain Capital Ventures in San Francisco on Tuesday at a conference for fund managers. And one of the presenters he was like giving an example of just an incredible breakout story and that was created by AI. And he said, everyone here knows Phaedra, right? And I go, oh man. So this company is a team out of Google DeepMind that I met in 2019 when I first started the fund. And their pitch was, hey, we're going to use AI to optimize data center power usage. And I was like, man, this team is really, really smart. Like, but what do I know about data centers? And I go, but I had a college football teammate who was the CMO of Merck. And so I go, well, I bet you Merck has this problem. So let me introduce Phaedra to Merck. So I literally gave them their first enterprise customer that basically set their entire business in motion and on fire. I passed on the deal at pre-seed, which I probably would have paid 15 post or something. I think their next round is going to be a multi-billion-dollar round. And that's one of I learned the hard way. You back the founder. It's not my job to be an expert in whatever the market is or the problem is that they're trying to solve. It's my job to understand that they understand. and are going to find the way through that to success. So that one hurts. That one hurts. It's going to hurt for a long time.
So before I answer mine, so there's a venture fund called Bessemer Venture Partners, and you should check out their website. They have a link on there called their anti-portfolio, which is all the companies that they saw but did not invest in. This list includes Google, Apple, IBM, Intel, QuickBooks, Intuit, and dozens of other companies, any one of which would make any one of our funds. So the point of this is that venture is not a business of misses; it's a business of hits. It matters what you hit, not what you miss. And in fact, having those misses is a sign that we are doing our jobs right. That we are seeing enough of those meeting enough of the great founders, seeing enough of those good companies. We're going to miss some. It doesn't matter as long as we hit a few. Like if you're the best in the world, you're going to miss a few. My most recent one for me, I certainly have my fair share of misses. The most recent one for me, or not most recent, but the most present one for me is Statsig, which is a local company here that got acquired a week or so ago for a little over $1 billion. By OpenAI. I've known Vijay for a long time. He's a close personal friend of mine. And similarly, when he reached out,
Vivek, you passed on a personal friend.
yeah, I did. Well, okay, so I've invested in a company called I invested in Databricks, and that one was, and when Vijay pitched me, it sounded super. The company sounded super competitive with Databricks at that time, and I was like, well, this doesn't really make sense. This other investment of mine is really doing well, and as VCs, one thing we do not do is certainly invest in competitive companies, especially the ones that are doing really well. And so I passed on for that reason. But I think if you squint, you can always look for ways companies are not competitive either. And in hindsight, I could have and should have done that, but obviously can't take that back. But that was the most recent miss for me.
But hopefully, if you lost the outcome, but you gain an LP, right? Hopefully, he's going to heavy up into the next fund.
Yeah. So
Right.
Yeah, we're still friends, and we yeah.
Does he pick up your calls?
I don't try to call him, but I think if I did, he probably would. When I moved to Seattle, a year and a half ago. He was one of the very few people that I knew in Seattle when I moved up here. So I spent a lot of time with him back then. I'd already passed on the company. The company was already doing really well. So it was already obvious even before the acquisition that I'd missed it. The acquisition didn't make me realize I missed it. I knew for the last year, maybe a couple of years, that I'd missed a big one there.
Gotcha.
So we've only been around a few years. So we have like one that I can talk about, but I'm sure there's gonna be many more.
Yeah.
So when we were running our accelerator before we had a fund, one day my co-founder Justice gives me a call and he's like, "Hey man, I talked to this founder, this guy I used to work with at this fintech company called Pinata in New York. They just raised like 20 million, Series A, 25 million. And he's like, hey, this guy's old roommate is starting this mushroom coffee company. And I'm like, dude, we're trying to back like tech startups, what are you talking about? And he's like, yeah, but he's saying he's like a really smart guy. We should talk to him. So we had a call with this founder. And after the call, I was like, oh my gosh, this guy's a rock star. So we actually took him into our accelerator. At the time, they were doing about $8,000 a month in sales, so selling mushroom coffee online. And they went through our program. We put them in front of investors. We found them their first lead investor, a firm out of Jacksonville, who put in $750,000, then ended up leading the next round and the next round. And this company is now doing over 30 million a month in revenue.
Oh my God.
It's called Rise Superfoods. You guys are all going to get ads now, probably on Instagram.
I gotta give it to you, Pablo, because you just literally did a whole story, and then you were willing to tell.
I'll talk about it. And founder doesn't pick up my calls anymore. But in the beginning, when we first connected him to that investor, he's like, you really changed the game for us. Thank you so much. And I'm super proud of him. He has an incredible story. He went to Harvard, was working at Maxwell House Coffee as a brand manager for the first 2 years. And then he pitched them on selling mushroom coffee. And they were like, no, this is going to cannibalize our own sales. We're not interested in this. So he literally quit his job, cashed out his 401k, moved to his parents' basement and started selling mushroom coffee online. That's how he started. And what ended up happening is like we launched our fund a couple of months after they had raised that money from that firm we connected them to. And the founder was like, hey man, we're already worth like 12, 15 million, but like you helped us so much. We'll take a check from you at like the past round. And we had just launched a fund, and then going back to like, we had to figure this out on our own, you know, and a lot of people will give you different advice, right? And you have to kind of pick and choose. And in the beginning, you don't know. And so we had a lot of people telling us we had to focus. And so we ended up picking our focus, like we're going to do like enterprise software and government tech. Like these were the areas that we were focused on. And so we basically like talked to a couple of our mentors who were like fund managers, and some were like, wait, you're starting a new fund and you told everybody you're going to do like enterprise software, like B2B companies. And now you want to back like a consumer like consumer packaged goods, mushroom coffee company. And I was like, okay, like maybe he has a point. So yeah, we had the opportunity, we ended up passing and hard, but the lesson that we took from it is now that's why we're a generalist fund and we'll back as long as we're not.
The market told you something.
We bet on people, right? So it's like, I don't care what you're building as long as it's not like not ethical or like you're doing something that's bad for the planet or whatever. Like if we think that you're a great operator or founder, we're going to back you. That was the hard lesson to learn.
That's cool. Then the reason why I asked that question is because a lot of times people don't really look at it. They don't see this side as it pertains to the things in which that got passed up on. And, you know, it kind of like brings the human part to venture capital, where a lot of folks only just think that it's just ones and zeros and everything else. And there's actually like, there's passion here. And what is it that you do? So I guess the question is like, because there might be some folks in the room that might be looking to explore this pathway towards venture capital and may, who knows, may become a future LP of one of yours. So anything to say to them as it pertains to like, if they're thinking about it, what would you say?
So yeah, I talk to LPs all the time. Obviously, it's just part of the job, and I like doing it. And most of our LPs are, you know, what we'd call high net worth individuals. So folks who can, you know, invest, you know, $250K over 4 years into a fund. And what I say is the first thing I say is that venture capital is a really, really hard asset class to perform well in. The numbers will tell you, look at it this way. If I take your money and I hold it for 12 years, and then I give you back 2 times your money, that makes me a top quartile performer in venture capital. Okay. If I give you 3 times your money after 12 years, that makes me a top decile performer. Okay, you can do better than that in, you know, real estate or whatever. The reason that you're doing venture capital as an LP is because sometimes you get a 50x or 100x or a legendary 1000x Facebook fund. So what we tell LPs is, look, this has to be money that, you know, you don't need liquidity on for 8 to 10 years, that you're not going to be, it's not going to change your life if it comes back to you 1x in that time frame. But if you are looking for diversification into an asset class that can massively outperform, then it's about manager selection and finding out what's comfortable for you, and you know, working with people you can trust, and you know, a thesis you can believe in. But it is, the first thing I usually say is like, it is a tough class to perform in.
Yeah, and if you're looking to become a VC, the flip of that would be it seems way more glamorous than it is. It's, you know, I think most people experience this role of VC sitting up on a stage and being wise and all that, and that's really not what the role is. It just is extremely unglamorous, extremely hard. You have to raise money from investors, convince the best founders to take your money because they have the choice of their set of investors. So you're selling constantly. You're selling to your investors, you're selling to founders. And if you don't like selling, if you don't like truly working with people, this is not the right business. It is a hard business, and truly nothing glamorous about it. And despite all of that, no matter how good you are, you don't get a feedback loop for 10 years. You don't know whether what you did was good or bad for a long time. And even if you are good, you may not be that good compared to what you can do in other asset classes. So I think this is so something you go into really eyes wide open. You've got to really know what you're getting yourself into. And as a result, recently you're also seeing a lot of people leave VC as a result of it. That there's a big migration away from VC as we've gotten out of the zero interest rate period when VC seemed a little bit easier. Everything was a little bit easier. As we've gotten out of that a little bit, it's gotten even more challenging. So if you're thinking about getting into it, I think, talk to a lot more people about what it's like.
Absolutely. Yeah. I remember when we had just launched the fund, I was in New York for an event, and I was at this event and I was like meeting people, and like, I like in New York, everybody works in finance. A lot of people work in finance. So I like met somebody. I'm like, hey, you work in finance? They're like, yeah. And then they asked me the same question, and I was like, no. And then I thought about it. I'm like, wait, I do work in finance. And I think, the cool thing about venture capital is it's the one part of finance that's so much about people and a lot less about numbers. And so I think like if you have a high level of curiosity and you love to meet like ambitious people that want to change the world and are building really interesting things, it's incredible. But like the two of them said, it is a very tough business to perform in. And there isn't liquidity for a long time. And there's a lot of uncertainty. Like your portfolio, you could be crushing it one day, and then the next day so it's a very, very tough business, and I think you have to have very thick skin if you're going to work in venture. And also, if you're going to invest in venture, you obviously don't want to put your whole portfolio in it. You want to put a small part of your I think it's a healthy part of any portfolio, because again, if it hits, like Kirby was saying, sometimes you can get in on these outliers and make great returns, but you don't want to bet on that, because how often does that happen, right? So you want to get into multiple funds. You want to get into multiple deals. You want to get well diversified, and you don't want to put an overwhelmingly large portion of your portfolio into venture capital.
Thank you. All right. Final question. You ready?
Right.
Y'all ready?
Good.
Let's do it.
Make it a good one.
Wait, I haven't been giving y'all good ones so far.
When are you going to start the real questions?
Pressure's on.
Okay. Well, all right. Yeah, okay.
We thought these were all softballs.
No, it's jokes.
I got 3 questions for you. All right. So, because we mentioned something about thesis, right? And then on top of that, I also mentioned something about like we're seeing the rise of a lot of AI-based startups. We got some folks that might be founders in the room. So your best piece of advice before they even ever come and sit in front of you or talk to you, what would be the best piece of advice that you can give to one of them?
Start with the problem. You just have to find a problem that matters. You figure out how to solve it, of course, but we always tell founders, like, your customer doesn't care about AI. Right? Your customer cares, is their problem getting solved? And AI is just like, a really amazing way to create software. But it's just software. And you use software to solve problems. So my one piece of advice is just start with the problem. And if you do that and you let the problem guide your efforts, you're going to create something that's valuable to someone. And of course, then the problem has to be big enough, and it has to be urgent enough, and it has to be worth enough money. But you have to start with the problem.
Talk to customers as much as you can and as often as you can. I think it's just a different side of the coin of what Kirby was saying, is just talk to customers. Don't build your business for investors, build your business for customers. Talk to them as much as you can, and investors will follow.
I would say you want to be selling from day one. Right. And this goes to like talking to customers, because selling is also learning, right? You're qualifying, you're trying to ask questions, you're trying to see if they're a good fit, if they have the problem, and you're trying to learn about the problem. So you want to be selling from day one. And I noticed like second time, third time founders, they're selling before they even have a product. And then they're using whatever they're learning to build the product. So sell before you're ready, talk to customers before you're ready, and then understand that every conversation with an investor is like they're putting an impression on you, right? So when you're talking to investors, like seek to learn. Don't try to maybe go in like in hard sell and hard pitch, and just try to build a relationship and try to learn from them. Try to understand about their firms. Try to understand what they're looking for, and just show that you're like really determined, really focused, and really curious and want to learn more.
Gentlemen, you are officially off the hot seat. Thank you so much.
Thank you for having us. Thank you for having us.
Give another round of applause to these gentlemen. You know, it's not always easy to sit back and like go forth and have these types of discussions. A lot of times we walk in with our own personal bias as it pertains to what we think it should be versus what it really is. And so that's why I felt like it was valuable to literally have this type of valuable conversation with these three great individuals. And the beautiful part about it is you see the breadth across different types of funds that are there. So I'm going to give you guys like a 5-minute break because I know that some folks, I saw some folks yawning. So I'm going to let you get up, stretch your legs because you did eat. And then we're going to get into our next one. Okay. All right. Take five. Take five.
It's a love, my people. It's your boy Deuce, aka Juice Baby. Take my baby. Take my baby to school for next week because you bitches ain't never been clean like testament. You bitches put me in that's a president. First and shit, I'm in the community, this celebrity. I'm a comedian. She getting 72 wins, 15. All I wouldn't say what show, but another two. Please, take them Friday. She got you gotta do the big thing, you know, you're just, you know, the different places and possible figure, you know, really have a space back, you know, she'll keep that woman, quite a line on vision, and turn it into straight up behind if I sell when it's to the straight in no word, place for the shoe, face to you, I'm having a right night, the face TV, my face cool, cutting up for the bill, let everybody next thing I change what you need for I was doing that double time of this and fighting what was here. And my brother could see that he was doing, but I mean, it was they should be coming to you. Not bad. Those like racing. They say no for
How are we feeling? How are we feeling? All right, y'all got to stretch your legs. Yo, for real, did I really throw softball questions though? That kind of made me feel some kind of. Hey, look, we're gonna have a talk after this. No, but did you guys get some value from that last one? All right, okay, all right. This one's gonna be very special for me. Now, I'm not gonna be up on the stage when this happens, as you can see. But the reason why this one's gonna be very special to me is because when I went to college, I attended Tuskegee University. You know. Here I am, this young man that's coming from Seattle, going to the South, where, I mean, y'all seen Seattle. And going down south to Alabama, different. And I already kind of like felt like an alien somewhat, being in my own home city when I was younger. And it was very, very cool my freshman year that I met some pretty cool people. And since then, I've always like kept it near and dear to my heart that the very cool people that I met along the way at Tuskegee, that I would always like, I was very intentful to always stay in contact and in communion with these individuals because they're very near and dear to my heart. So for example, you all have met Christopher Bush. We met during my freshman year in college. I brought on this individual before. We met my freshman year in college. And since then, since 2004, that friendship has just blossomed amongst other people. Like, I think shout outs to, he might be here, Antrail Kid, if you in the room. What's good, brother? Also, a come up cousin, but also I met him during my freshman year of college. So this is special for me because of the fact of doing this event at this point in time, and he gets to do the things that he's able to do, and the fact that he's able to share some pretty dope knowledge. I'm gonna bring him up in a little bit, but I haven't really worked on my shout out game real quick. So can I do that real quick? Okay, so we have some pretty dope sponsors for this event. And I want you guys to get to know, like, so I'll probably like sprinkle them in through events. Is that okay? As you guys know, I run a startup studio called From the Culture. And it was because I stepped down after trying to do what these gentlemen do on a daily basis. And it just, I realized that it wasn't for me. And I realized that, you know, for me, I'm a founder, bones to bones, through and through. I found my path, I stayed on it, and honestly, I'm running my race. It's amazing for me. It's amazing when I get to meet other people that are doing some pretty dope shit too. And I want them to also be celebrated, and I want you to explore. So can I get Natasha up here real quick? And so I want to give a shout out also to one of our LPs, Ahmed Nath, because had it not been for Ahmed Nath, this would not have happened and we wouldn't be standing up on the stage now. So Ahmed, if you're here, just raise your hand. If you're not in here, then we were still with you in spirit. He's probably out there like talking about a startup or something like that. But I also found out that she's also a come up cousin. And also we know some pretty cool people. But today, I would love for them to know about the cool things that you do.
Hi, everyone. How's everyone doing today? Amazing, amazing. My name is Natasha Burton. I am one of the partners of iWord Studios, AI Studios. And we sponsored this amazing event because why not, right? Like, so many people of color here. I have been a fan of what Mark has been doing for years. And with what we're doing right now, I have had a lot of success with a lot of different industries, restaurants, e-commerce, you name it. The one space that I struggled in was when I first started my tech company, which was AI book publisher, and that was in 2023. I had two big issues. One was finding a technical co-founder who was based in the US, no offense to anyone who's overseas, but I wanted someone based here in the US because I wanted to be able to have, I didn't want to have a language barrier, right? And the second thing that I was dealing with was marketing. I've been privileged enough over the years, every single business that I've done, I managed influencers and celebrities. And so I built a database of people who have a following over 100 million plus followers across all social media platforms. That's worked really well with my restaurants. That's worked really well with literally everything that I've done. And so I figured out, you know what? If I can take that and do it in the tech space, then I can have something really magical. And what makes us different is instead of just doing all of our projects in-house, we want to invite those who have ideas and who are founders, like I'm sure a lot of you are, and we want to become your technical partner. We want to be able to build out your ideas, and we want to also be able to offer the marketing channel that I have available as well. So that's why I'm here. So excited to meet you guys. If you're interested in looking for a technical co-founder, which I'm sure most of you are, don't be afraid to come up to us. Myself, my partner, Ivan Lee, come up to us, speak to us, ask us any questions. We're here to be of assistance. So thank you guys so much.
All right. So thank you so much, Natasha. And it's kind of dope because, you know, when you have From the Culture and then also her firm, they do similar things, but it means that essentially I don't look at that as competition. I look at that as more so community. And maybe in the future that we can also do some pretty cool things together as well. So thank you. All right, so y'all ready for this? All right, so I don't know if he really needs any other introduction because y'all have seen him before. Y'all are familiar with his game, but if you are not, you will be. So shout outs to my brother Antwoine Flowers, coming by way of Chicago, Illinois, PhD in neuroscience with a focus in quantitative analytics. Did I get that right? Oh, see. All right, see. All right, I got PhD right. So y'all have a wonderful one with him. Thank you, brother.
Thank you, Mark. How's everybody doing? Trying to get these notes right. Trying to get these notes. Let's see if let's see if the clicker works. Let's get all the technical stuff out of the way. No. Oh, you know. So PhD in neuroscience, master's in applied technology entrepreneurship. The degree Mark told me not to get. He said, his words, you learn it by doing it. He wasn't wrong. He wasn't wrong. But there are frameworks. There are frameworks that I found useful. So Mark asked me to come talk about state of the market in AI. I think the easiest way to explain why he asked me to come talk about state of the market in AI is because for the last 3 years, I've been building AI companies. 3 years ago, I moved to California to co-found a company called, at the time, Tunnel, with some guys. It changed to MyAesthetic.ai. It was supposed to be a MarTech platform that allowed you to scale personalization across the internet. It was this whole idea that had some Web3 ethos in there, there was some AI in there, and it failed miserably. You learn by doing. So I had no problem with that. Very cool. Since then, if you saw me last year, I was building a AI practice at agency. And essentially what we did at agency was we would go to startups and identify practice that needed, hey, you need a data science co-founder, maybe you need an AI co-founder, but you don't have that at this phase of development. And we would scope out work and start building things with them. Last year, I joined UpLabs. So UpLabs is a venture studio based in Santa Monica, California. And essentially what we do is we partner with large corporations and we understand every nook and cranny of that business and that industry. And then we go 0 to 1 on startups over and over and over again. If you're not familiar with what a venture studio is, the core difference is a venture fund will raise money and then they will go give it to startups or investors. A venture studio, we have our own $90 million fund, and we put together what's called venture teams. So individuals like myself would lead data science, we would have a CEO, a CTO, a head of engineering, and we would go 0 to 1 on these companies. We would get the first customer, sign contract. That would be our product market fit value. We would fund the company with $5 million, and then we go hire a CEO to run it. And so one of the things that you learn from doing this over and over and over again are where are the competitive advantages, where are the bodies buried, where are the opportunities to fail, how do you actually scale quickly, what are the tricks and tips you need to go from 0 to an enterprise level product in 6 months. And so that's essentially what I've been doing for the last year. And bringing all of that together, I think I've learned a lot about where the market is, how to get these companies invested, or how to get these companies funded, and then how to actually get enterprise customers onboarded. So a bit about me. I talked a little bit about my role at UpLabs. Before that, I did the San Francisco thing, so Google, Coinbase, et cetera. And before that, Mark already brought up, I had this transition from neuroscience kind of through the quantitative world, which is where I discovered data science and kind of landed in this industry. I'm also an avid outdoors person. I love being in California for that exact reason. This is from a backpacking trip I took last week to Kings Canyon. absolutely gorgeous. Great to kind of get out in the wilderness. Also, quick poll. How many of you are building or investing in an AI company right now? All right, we got a fair amount of hands. Very cool. I think this will be useful. So here's some of the things that we want to talk about today. And here's my promise to you. In the next 50 minutes or however long we're together, we'll be talking about the 3 principles for building vertical AI companies. And I'll kind of talk about what a vertical AI company is and why I think that's the way you want to build your product. First, we're going to kind of hop into the market reality. We're going to talk about what the state of the market is today, who's getting funded, what types of companies have been funded, and which companies are failing. Then we're going to talk about how industry and industry immersion is the #1 competitive advantage. And so the VCs that were up here before me actually hit on this quite a bit. One of the last comments that they made was, understand the problem, understand the industry, and that'll lead you to the solution that actually matters and will scale in the market. And then finally, we'll talk about autonomous execution. So this is the bolts and the replets and how you actually use AI to scale your development process in a way that allows you to outcompete. And it's really become sort of what investors are looking for and requiring for teams that they're funding now. They're not giving you $5 million and allowing that to be X number of years of runway. They expect that to pretty much get you to $2, $3, $4, $5 million in ARR. So you really have to understand how to have a lean AI-enabled team. So first, everyone here for the last 3 years, put your hand up if you've invested in NVIDIA. Okay, Alphabet. Got some Alphabet people, Meta. Got some Meta people, QQQ. Everybody? Okay. All right, so as we know, money has been pouring into AI at an unprecedented rate. Last year, the amount of money from the VC round that actually went into AI startups in all of 2024 was $104 billion. Halfway through this year, we're already at $100 billion. So the amount of money that actually moving into these startups is massive. A lot of this is actually going to a small handful of companies, right? We're getting these big mega deals everybody's talking about, but a lot of it is still early stage. But what we've seen is the types of companies that are getting invested in is actually rapid feedback to the types of companies that have been succeeding and or failing. So the mega deal reality, we hear $104 billion, but a lot of that money is wrapped up in like a $40 billion OpenAI deal or a $14 billion scale acquisition or something like that. But a lot of the money is actually still going into startups. Unfortunately, it's in like 2 or 3 locales. It's really not spread out. But what types of companies are people actually investing in? So as we can see, a lot of the early investments went to people that were building wrappers. Who remembers Jasper? Anybody remember Jasper? If you did any copywriting or were looking for an AI company that did copywriting, you would remember Jasper. It was one of the first AI companies built on top of GPT, and I want to say 2021 or 2022. You haven't heard of Jasper for the last 2 or 3 years. The reason you haven't heard of it is because it's been consumed. It was essentially just a plug into ChatGPT with some prompts that were cached that you could click on and would write you copy. How many of those startups or companies have we seen over the last 2 or 3 years come by that's essentially another skin on top of ChatGPT? A ton of them, right? Education was another space that just recently got destroyed. Education companies were taking off, building AI tutors and all of that. Both Anthropic and OpenAI have now come out with their own versions of AI for, or OpenAI for teachers, OpenAI for students, that actually have all of the features that these AI companies, that these education companies were building into their product. We've seen that in a number of industries. OpenAI is building an entire vertical section. They're going OpenAI for healthcare, OpenAI for education, OpenAI for defense. They're really going after any of these horizontal applications that really just are a chat interface and some information or data in the back. And this is where, we see a lot of the cannibalization of these businesses. So the 2025 to 2024 trajectory is actually really interesting. We are seeing a lot
of increase in funding. We're seeing a lot of the mega rounds, but the investment strategy is shifting from hype to performance. So the 2024 strategy was essentially, hey, this is a hot idea. My fund needs to be in AI. This cool guy came from, Meta, or they came from Google. Let me put some money in. Let me see what sticks. The other thing that a lot of people were investing in was infrastructure. So if you needed something for vector databases, if you are building AI, vector databases are essentially a specialized database that allows AI to have memory, right? Vector databases were getting an enormous amount of funding, right? Sales agents are another one that were getting an enormous amount of money. I remember there's a group of kids out of the UK, I think got $40 million for the AI SDR. It was terrible, by the way, but $40 million in funding. In 2025, we're moving towards production. You have to be able to not just get these products in production, but you have to be able to get them in production at scale at enterprises. And one of the big challenges that these AI companies are facing is that enterprises, most of them don't exist on the West Coast or in New York. And what does that mean? It means multi-billion-dollar businesses are still running their businesses via email, Excel, and not in the cloud. There is no clean repository of data for you to do retrieval augmented generation on, right? A lot of enterprise AI projects are failing. And as a result, a lot of the startups that thought they were going to scale by getting $1, $2, $3, $4 million enterprise contracts are actually finding themselves out in the cold, not able to sign on customers 2, 3, and 4 because they're not able to deal with the reality of the industry they're trying to scale into. So revenue expectations are also sorry if I'm too loud. Revenue expectations are also adjusting. So you used to be able to go from seed to Series A with $1 to $2 million in ARR, depending on the industry and facet you are in. Now, if you're an AI company, VCs are expecting you to scale much more rapidly with much lower headcount than people were ever expecting before. And the reality is, or the reason is, because so many companies think Perplexity, think Cursor, have scaled to $100 million in ARR seemingly overnight. And so if you're in that same bucket of companies, the people that you're competing against are getting 10, 20, $30 million in ARR in their first couple of years, in existence. And those are the targets that VCs are really looking for right now. So those slow scaling traditional businesses are having a harder time. And so our investment committee internally has even told us, hey, the types of businesses that you build have to fit certain criteria. And these criteria are AI that bridges into the real world, meaning it needs to be capturing data or impacting something in the real world. Because if it's not doing that, OpenAI or Anthropic can probably do it, right? So if we're not integrating into some system or building some net new integration that they can't build or they don't have access to, we don't really have a defensible moat. AI that leverages data to create moats, flowing right into that exact same thing. How do we actually start to create industry-specific data sets, embeddings, all of these artifacts that allow LLMs to perform better than the generic LLM? How do we start to capture those as our business grows so that we build this flywheel of defensibility? And then 3, automation that replaces human tasks. And by this, what we're actually looking at is corporations coming to us, corporations that we partner with saying, hey, we want to double our revenue, but we want to double our revenue with the exact same headcount we have today, which is part of the reason we're already seeing the impact of this in the labor market. And so Jerome Powell just acknowledged the other day that AI is already impacting not just the number of jobs that new grads get, but the number of jobs that mature, experienced people are getting in the market, because companies are fixed on not growing their headcount, but still seeing productivity gains due to AI. And so the brutal reality that we're facing right now is that horizontal businesses are getting subsumed. And one of the reasons that these horizontal applications are losing is because if you think about it, there are already SaaS applications that do these things. So I'll take the sales AI SDR one for an example, because there were a lot of these popping up. If you're a company and you already use Salesforce, do you really want to add another AI tool on top of your Salesforce in order to scale this business? Or is it easier if Salesforce just gives you an AI agent that it can plug into the workflow that you already have? The answer there is obvious. So everybody that built something that thought that they were going to outcompete what Salesforce did, but didn't have the CRM capabilities of Salesforce, quickly realized that they weren't going to be able to scale that business. The good news for that is that probably leads to a lot of acquisitions of these companies down the line, and that's exactly what we're seeing. Some of these really large horizontal SaaS companies that already have these workflows built in are actually acquiring some of these startups in order to bolster their AI talent internally. And so what separates winners from losers? Well, at Up Labs, one of the things that we see is our core benefit is partnering with incumbents. And so what do we mean by this? The gentleman that was just on stage said it. You have to understand the problems of the industry, and you have to understand why those problems exist. Some are process problems, some are technology problems. If you don't really have an understanding of how your solution is going to fit into the culture, into the workflows, into the technology stack, what you're going to hit when you try to scale is a whole lot of friction that doesn't allow you to close those first couple enterprise contracts that VCs are going to say you need to close in order to show traction. This is what's stopping people at that 80% gap where they have a really dope AI demo, like a product that works in isolation in demo form, but when they actually try to onboard it to an enterprise customer, it gets stuck, right? It gets stuck, the accuracy is too low, the performance is too low, and ultimately these companies stop moving forward. The losers are competing with incumbents, and they're building on top of external APIs that they are not customizing or improving in any way, and they're simply just waiting to be subsumed by some of these bigger frontier labs. One of the biggest examples of this is actually, if you see what Google and Google Workspace are attempting to do. Microsoft is the king of this. Microsoft realized if I already have all of your data, and you're already using Power BI, and you're already using Microsoft Fabric, why would I let you go use any other AI startup for anything that touches any of that? So any enterprise search tool that allows you to become more organized, they're like, well, we have organization tools. Would you like me to put AI there? It's much easier for these large embedded companies to outcompete startups. One, because the contract values. It's a minimal cost for you to add AI for each of your users onto an existing Microsoft contract than it is for you to sign a $3 to $5 million enterprise contract deal with a new startup or multiple startups that you may need for a single workflow. The second principle that really I've been talking about today, but I want to drive home, is that domain expertise wins. When you're building vertical AI, what we're really talking about when we say vertical AI is niching down into a specific set of language, into a specific set of processes, into a specific set of tasks, and a specific set of cultures that really speaks to the industry that you are serving. Why do I say this? Because when we talk about LLMs, we're talking about large language models. One of the core things that actually stops these things from performing is not understanding the language of the customer that they're talking to. So I, for example, build a lot of autonomous data science systems. So we try to automate the work of data scientists. But if I'm giving you data and you don't understand how these two components are related, you don't understand that a nose header in advanced manufacturing means a completely different thing than it does in medical manufacturing, then you're not going to be able to complete the task that I give you, and you're not going to give valuable input and feedback to the customers. And so you have to modify and ground these tools in the language of the industry. And the only way to do that is to work with industry incumbents in order to understand what their language is, get their documents, get their unstructured documents, create artifacts, and create smaller AI models that work specifically for the customer that you're serving. This is what we're seeing is actually building a competitive advantage. So what is the wrong way to do this? Apply general AI to a specific industry. Don't just take ChatGPT and say, hey, I only serve manufacturing. That's not vertical AI. What we mean by vertical AI is to become native to an industry, native in the language that your model uses, native in the embeddings that you generate, native in the data sets that it understands how to parse, and native in the outputs and artifacts that it can create for a particular user or workflow. And so what is our process for discovering these vertical AI solutions within an industry? It's actually not too different from what I would do if I was going to build a horizontal solution. But the really interesting thing here is we have two problem hunting phases. The first problem hunting phase we use are problems worth exploring. Here, we're really talking, and this goes back to, once again, what the panel was saying, we are really focused on talking to customers. One of the things that we have at UpLabs is a database of thousands of conversations that we've had on platforms like Alpha and Gartner, and actually going out and finding executives that are willing to have what we call ethnography conversations with us, and finding out everything we can about the problems that exist in their day-to-day workflow. Before we even have an idea, we're talking to the people in this industry about what's costing them money. Where can't you hire? Who can't you hire? Why did you miss earnings? What's going on with that riff? Why did you have to lay so many people off? What are the things that are impeding growth in your business? We have conversations with people in the industry before we even come to the industry with any type of solution. That allows us to map all of these things out and kind of categorize them based on the pain that they're causing, their proximity to revenue, and then we actually want to go to industry validation. So now I've heard a couple of problems from a couple different customers, but I need to understand if it scales across the industry. Now we can use like deep research tools to actually create research reports for us. We can parse all of these transcripts. I mean, AI is one of the best research engines that has ever existed in history. As somebody that had to write research reports manually, the fact that I can now take tens of hundreds of hours of transcripts and conversations that I've had, put it into an engine and say, hey, pull out these key points and structure this in a research report for me and help me understand the issues that exist across all 100 of these conversations. And it just kind of pulls out and gives you evidence. I mean, it's one of the coolest tools we have in problem discovery today. And from there, we go to problems worth solving. So how do we go from a problem worth exploring to a problem worth solving? Which of these is close to revenue? Which of these, if I actually solved it, could I come back to you 6 months later and say, I generated X amount of revenue for you? Because when I'm talking to enterprise executives, the only thing they actually care about is EBITDA. If I can't go back to the board and say, this product or this tool that I bought generated this much EBITDA for my business, then they are not going to sign on a dotted line for a $3 to $6 million enterprise contract. They're simply not going to do it. And that's one of the biggest things that I see startups not understanding as they talk to enterprise customers is how this actually generates money and how we measure how much money it generates for an enterprise client. And then finally, we go through technical feasibility. We say, okay, these are the problems that are worth solving. What technology do we have here today? And which of these allow us to actually get the most leverage with the technology that we can build with? So then we find the most feasible option with the highest amount of revenue that we can generate for the customer. And then we move to business worth building, where we do product positioning, market positioning. Who is our competition if we were to build this solution? How easily will we be able to scale? How easily are we able to differentiate? We go through this process over and over and over again. And every single time we learn new things, we keep the data, we get faster at it, we get better at it, we get more efficient. And so when we talk about problems worth solving, one of the things that we identified in the business that I was working with at our corporate partner now is Wabash National, the third largest manufacturer of tractor trailers. One of the problems that they wanted to solve is, hey, I create this trailer and now I have to sell aftermarket parts. But it takes me a team of 50 people to sell aftermarket parts. But the aftermarket parts business gets me an 11x return on my enterprise value in terms of the valuation, whereas my manufacturing only gets me a 2x return. So the EBITDA gain that I get from parts business is actually almost 5 times higher because I don't have the labor costs. I'm just selling parts that I don't manufacture. And so when we heard that, that immediately triggered a number of our, okay, enterprise value, scalable, more investable to the market. And we did a technical feasibility and said, of those 50 tasks, what are they actually doing? Are they doing things that LLMs or AI can do well or as well as a human today? And if so, then we think we have a match. And so that led to the first business we started building for them that we're actually launching and going live with in November called Parts Pulse, right? How can one person manage $100 million aftermarket parts business for $1 billion manufacturer? this is kind of how we came to the problem and solution. We didn't start thinking this. We actually spent 6 months with the customer before we pitched our first concept. And so what industries are right for this type of vertical AI development? Well, one of the first things is it extremely process-oriented and driven? This goes back to RPA and automation. So RPA is I won't say it's old, but RPA is a 20-year-old automation process, right? But it's extremely manual and it's extremely fragile. So agentic AI actually gives us a really powerful ability to automate things that need some level of understanding or flexibility in the routing of a particular task. And so process-oriented things where those processes are documented with a lot of SOPs and a lot of text that we can just consume and build a system to automate, those are really right for this type of automation. The next thing is, which of these have not just have extensive workflows, but have extensive workflows that output data. So manufacturing, once again, is great because every time something gets built, you know the speed that it was built, you know the cost that it was built at, you know how many defects you have coming off a particular line, you have sensors in your manufacturing line, but manufacturing isn't the only place where processes like this exist. Healthcare is another one. Every single interaction that somebody has with a patient is documented. Every outcome of a disease, every outcome of a treatment is documented. So healthcare is another one where this is actually, you start to see these patterns and these processes play out over and over and over again. And if you can get access to manufacturing data or access to healthcare data by joining a corporate accelerator or working and trying to partner with one of these companies, or even partnering with a smaller company that may have some of this data, it allows you as an entrepreneur to build with your customer. And that's the thing that we think in this era of AI development is going to be the thing that separates the winners from the losers. Who are the startups that build with their customers? So obviously, as a studio, we have a lot of advantages. We go through this process 100 times. How can you replicate the studio advantages as entrepreneurs? Your local meetups, organizations like this, masterminds, talking to other people who have built in this industry, failing over and over and over again. But the absolute fastest way is to just repeat the cycle that we had and just spend every week, every day, having some type of conversation with somebody in the industry, capturing that data in a structured way and building a repository of that knowledge. Now, obviously, you're not going to be able to do it at scale the way a studio does, but if you get enough people that are building in this space, maybe somebody's building over in this area of manufacturing, somebody's taking on HR, somebody's taking on, MES, somebody's taking on supply chain, and starting to put these entrepreneurs together that are all having similar conversations, what you start to build up is a repository of knowledge. I'm looking at Mark. From the Culture should be publishing the repository of knowledge and conversations that all the companies have and giving it to you for free. Putting him on the spot. We're working on it. And I'll do my best to try to publish some of ours. So the last thing that I'll talk about today is how do we actually build AI that scales? So everybody knows you can get to 80% of a solution. Maybe everybody does not know that, but 90 to 95% of all enterprise applications or tests right now are failing in production. So you hear people talking about it on CNBC all the time. Is AI all hype? Enterprises are trying. None of these things are making it into production. It's not actually generating any enterprise value. Why is that? There are a number of reasons why. There are too many to go over today. But the specific things that we want to talk about is the one missing piece that I think most people don't do at the beginning of building their AI product that costs them at the end. And it's robust evaluation. If you are not evaluating how your model performs at the very beginning of you building your product, then by the time you actually hand it to a human and it's not performing at the level they needed to adopt it into their business, you will not be able to backtrack and retrace, given the complexity of these systems, why it is not performing. Every component, every module, every piece needs to be tested just like software. Vibe coding is great. I love it. I do it all the time. But the reality is what it's allowed us to do is move away from good software engineering principles like testing and logging. If you don't know what those things are, there was a gentleman on stage earlier today that actually brought up vibe coding is great, but you still need to know some software principles to build software. Or what you're going to get is a really great demo that doesn't go anywhere. And sometimes those demos are enough. If what you need is to win a pitch competition and get some cash, if what you need is to get a demo in front of an investor to get them interested, bulk, replit, all of that, great. If you don't have a designer or a product manager on the team and you're trying to scale that, great. But the moment you're trying to deploy this to a customer, you need to be implementing these software engineering practices like evals. You can't fix what you can't measure. That's the key point that is stopping a lot of these things from going into evaluation. Then production requirements. What am I hearing from customers that they're saying is stopping them from implementing enterprise AI? Accuracy is the first one. A lot of these systems are inaccurate. I mentioned at the beginning, a lot of them are inaccurate because they're using general models that are not fine-tuned on the industry or the language of the end user, and they're not grounded in that language using things like knowledge graphs and embeddings. And so the accuracy of the responses that they get are anywhere from 10 to 20% lower than what users would expect to move into deployment. Finally, is security. For anybody that's a developer, we just had a really big kind of vulnerability scare this week with NPM and NPM packages. And these types of vulnerabilities are everywhere in AI. And if you had anything to do with crypto, you know that very, very quickly, if you got into crypto, you have to figure out wallet security and all these other things because there were a million scams that popped up. The exact same thing is happening with AI because we're building on so many open source frameworks with so many open source tools. And now MCPs and everything else are allowing you to plug your enterprise data into an LLM that some guy on GitHub created, and you've never done a security review on it. And next thing you know, you plug it into a customer's data and it's gone. Where not enough people at this stage are focused on how to actually build an AI system securely. And that's stopping a lot of enterprise adoption. And then finally, complexity. Integrating with these systems. I mean, one of our customers now has a 24-year-old SAP implementation. So SAP is an enterprise resource planning tool. It basically says if I'm building something, are all the parts that I need in the place that I need, right? So SAP is the monster behemoth in here. Integrating with a 24-year-old SAP system is a pain in the ass. And the reality is a lot of your work before you ever bring software engineers in is going to require data engineering and good old-fashioned elbow grease in order to get that data in a state that is actually usable by these AI systems. A lot of people trying to sell in the enterprise are not taking that into account. And that's another thing that is really stopping and or slowing down enterprise AI. B2C, a lot fewer of these problems. But if you're trying to sell to an enterprise, if you're trying to sell to companies, this last one is probably the one that is the death knell for most of the companies that I'm seeing. So what am I working on? And how does it kind of all fit into this framework? So my focus for the last couple of years has been autonomous data science. And why am I focused on autonomous data science? Is because the companies that we serve are in Arkansas and in Indiana and in St. Louis. And the reality is they simply cannot hire the amount of technical talent required to compete with their Asian counterparts. So in the trucking space, the #1 trucking company in America right now, in terms of manufacturing trucks and or trailers, is Honda. Why? Because they have automated plants in Mexico that are almost fully run by robots, amazing data, amazing software teams, home built, and they're running laps around legacy manufacturing businesses that are existing in Minnesota, Wisconsin, Illinois, Indiana, Ohio. And this is important. It's important for American competitiveness, right? The world does not exist on the coasts. I don't think most of you came here from the coasts. We need to maintain the competitiveness in these core industries. And if we don't, we are going to see the GDP of America, the unemployment rates of America soared. And this is something that's close to my heart as somebody that's from the South Side of Chicago. And I saw the Ford plants leave. And I saw what happened to communities that get gutted when these jobs leave. And so one of the things that I'm focused on is not replacing data scientists, but actually allowing data scientists to go in, do the first couple analyses that these companies need, automate them, and then putting an LLM in the middle in order to translate the output of these models, of these predictions, into a format that is usable by the business user. And why am I even pointing this out? Why am I talking about this? Because one of the core things that I see, core mistakes that I see when people are building AI companies, is they're not using LLMs to do the things LLMs were designed to do, which is generate language. Now we're using them for reasoning and all these other things, but the reality is they were built to generate and understand language. So if I can give it data and I can give it context in the context of this business, and I tell it that, hey, you're working with the chief executive of this company on a supply chain problem, and it understands supply chain, and I feed it every single data point, thousands of data points an hour that are coming into this business, way more than that executive could ever parse. It gives that executive the most powerful assistant they've ever had. I can scale a data scientist to everyone in your management team. Something that's simply not just impossible from a cost perspective, but from a staffing perspective. And this doesn't require you to change your culture. It doesn't require you to bring new people from the coast. It doesn't require these companies to hire remotely. It allows them to maintain the structure they already have, but enhance their capabilities dramatically. And I think that this model, I personally believe that this model is going to be what we see a lot of successful enterprise companies, a lot of successful implementations of enterprise AI looking like. And so finally, from zero to enterprise in 6 months, how do we build really fast? The main thing we're using Replit and all of these things for is rapid prototyping. The idea that we can now sit in a meeting, have an idea about what feature we think a user would like, type that into Replit, have a prototype made, send that screenshot over to a customer and say, hey, is this what you meant in that meeting by you would love to see a graph up under this? They say yes or no. I tested a feature and spent 0 dev hours. And now I just send that over. I actually don't even send that over to the engineer. I then say, thank you. Now create me a set of epics to explain to my software engineering team how to build this into our product. And then I just put the epics in our in linear, in our tracking system. And now what we're implementing on top of that tracking system is AI software engineers like Devin, and just saying, hey, the easy stuff, you just take that. I only want my software engineers working on like the more complex things. But if it's just changing the front end, changing some colors, making this scroll, adding a date, all those small tickets, Devin's taking. And so this is allowing us to scale and build enterprise level products in far less time with far less money than companies would have ever been able to do or startups would have ever been able to do in the past couple of years. But it is requiring us to change the traditional workflow of product to design to front end to back end to QA to testing. We're wrapping all of that up in a sort of consolidated dev package interspersed with all of these various AI tools. And it's actually allowing us to build better products, things that are vetted by the customer before we even develop them, and have far fewer revisions or things we have to backtrack and fix. And then finally, my big focus and the thing that I would say to anybody in this room is automate human expertise. Don't try to replace it. We are the people that can see into the nuances and the cracks and the problems. How do you do that? Map out your process for solving the problem, and then build an automated system to allow yourself to scale and solve more of those problems and create more value. But when we simply ask AI to solve a problem, they have no creativity or ingenuity, and what you end up getting is subpar products as a result of that approach. AI artifacts, this is a technical components. So I'll kind of skip over this. But the AI artifacts that we want to generate for vertical AI, I think like embeddings, knowledge graphs, ontologies, things that allow you to ground the AI in the language of the industry that you're actually building. And then success metrics that matter. I've brought this up a couple times now, but the success metrics that really matter are how close are you to revenue? And how quickly can you integrate with somebody's system and start to bring value? You can't take 6 to 12 months or 6 to 18 months to integrate into an enterprise system anymore. People simply don't have the time for it. They don't have the time for it. They don't have the money for it. And you're not going to get the implementation fee you need to make it profitable for you to work with a customer for that long. So what do I think is coming in the AI market? I think we're going to get a lot of mergers and acquisitions. I think we're going to see a lot of these smaller companies get eaten up. We saw Scale AI with that massive acquisition. I think we're going to see a ton more of that stuff. A lot of these small kind of point solutions start to agglomerate into these larger kind of vertical, but fully baked solutions that go across an entire problem set. I think that's going to happen. I think we're going to continue to see this talent-driven consolidation. And by that, I mean, there's just not enough AI talent out there. So people are going to be doing a ton more acqui-hires just to get that talent on board of their company. And then I think we're going to see a funding reality check. As a lot of these companies fail to materialize revenue because they're not following some of the principles we talked about in this presentation, I think you're going to see a lot of these valuations start to drop, a lot of down rounds. A lot of these companies continue to go out of business. We already have a really high fail rate in AI, but anytime you're at that beginning part of right after the hype cycle, you're going to see a lot of these failures before we see, it kind of level off. Yeah, my mission is to democratize AI and democratize data science. Thank you. And any questions?
Thank you very much for your presentation. I guess my question is for someone who, or for new data science graduates, I think recently reports have come out that it's hard to get a job for new grads, also because of companies trying to, I don't want to say steal, but take talent from each other in this areas. Where would you say a new grad tech person should focus on, especially in the data science field? Is what I'm
focus on in terms of learning. Focus on in terms of learning.
Not learning, but it seems like the barrier to getting a job in tech right now.
Barriers to getting jobs are hard
right now for data science program. And as we've kind of noticed, as you pointed out, and for big ChatGPT, things like that, it seems like companies can turn to that to eliminate fundamental data analysis is what I'm trying to say. Where would you say, where would a data science graduate or someone who is looking to graduate kind of focus on to really like point his skills to be more appealing to companies?
I love that question because I get to nerd out about one of my favorite stories. So I'm a Trekkie because my dad made me watch Star Trek growing up. In Star Trek, if you were a science officer, you would go into the lab, right? And you would talk to the computer. And you would say, computer, I want to simulate this sun moving at this speed, hitting this, and let me know where the photons go or some shit like that, right? What AI is doing is it's removing the computational barrier between you and massive computing power. So the problems that you should be able to solve as a data science graduate today should be 10x the problems I was able to solve as a data science graduate. Because I had to write Python and SQL and all this other shit to be able to actually access data and do anything with it. You can just talk to a computer, right? What are the problems you want to solve as a data scientist? Why are you a data scientist, right? I'm a data scientist because I love finding ways to make businesses more money. That I'm passionate about that thing, right? I don't know what you're passionate about, but whatever it is, you should figure it out because you need to be excellent at it now. And one of the things that I would do is if I'm showing up to an interview, I'm researching that company, I'm researching the types of data science problems that they're solving, And I'm doing an entire project for them. And in the interview, it's like, I'm glad you asked me about building that model. I actually already built it with synthetic data that I use because you can do it in a tenth of the time. So it's all up here now. It's an intellectual exercise. So if you can't demonstrate to me in the real world your ability to create value and the computer writes the code for you, well then, yeah, I don't want to hire you, right? So demonstrate to me that you understand how to solve a company's problems. That's the way to stand out.
Hello, my name is Ashley. Thank you for your presentation. You talked a lot about enterprise and really trying to meet the need of large scale companies. So working at a Fortune 200 company, I see that we're really trying to use in-house in terms of creating our AI products. So can you speak to like, how are you advising your startups with not only competing against large enterprises, but also competing against the fact that companies feel that they can make their own AI in-house, and where do you see the future of that going, being able to compete and bring value?
Right now, UpLabs has Alaska Airlines, JB Hunt, Wabash as corporate partners, and we have one more that's stealth that we haven't announced yet. And every single one of those companies came to us after their internal AI projects failed, because it's really easy to get like halfway there. And then they're like, okay, how do 50 people use this? How do we actually measure if it's creating value, right? You're talking to people that like, if I come to your company and you have an IT team and not an engineering team, then I already know the type of company that I'm talking to, right? You're not a product-led engineering firm, so you don't have the competence to build scalable software. And so what's going to end up happening is OpenAI or somebody's going to come to you and say, hey, that thing you're trying to build, just give us $2 million and we'll finish it. We appreciate it because when we get there, we see what problems you were trying to solve, right? Maybe you were taking the wrong approach. You didn't have all the data you needed. There's a little bit more expertise. But I don't think there's competition. 95% of those projects fail. So good luck.
Type shit.
I just want to thank you for your presentation once again. So in this age where like vibe coding is getting more and more popular amongst founders, I just kind of wanted to ask about the importance of like cybersecurity, as you mentioned before, like a lot of packages replicating like in NPM. And Jimmy, you also mentioned something like that too, about how a lot of AI produced code is just very unsecure in general. So like, what advice do you have for founders who are trying to build products and build solutions, but might not really have like the know-how or as far as like software architecture goes?
I think vibe coding is great if it leads to more people studying software engineering. But the reality is, if a tool comes out that is a robot that allows me to build a house, but I never studied architecture, well then, are you gonna live in a house? I've heard this today, but I'll echo this. Take the time to learn how to build what you're building, or recognize that your job is the job of a PM and that you are putting a vision together, right? And go use that vision to get your first customer and prove product market fit and all these things, and then get the equity to go hire a software engineer or a software engineering team that can kind of come behind and clean up the code. But I would not plug vibe coded software into an enterprise. The risk is just too great, right? MCPs themselves, they have no authentication components. It's the wild west, and we saw with crypto how that went. And it's only going to take like one failure for a startup to get, I mean, it'll shut you down, right? One data breach, one thing like that, and you're done. So I would just recognize where you live in the stack. And if vibe coding has got you interested in software, and just like I told the data science brother, you can go learn system engineering and system architecture and not even know how to write the code, right? I write all types of front end and back end shit now, and I have no idea how to write JavaScript. I'm a Python guy, but I know how to structure software. I know I need logging and error handling and all these things, right? I know how to build the structure of it. And then I know enough to send it to my engineer to be like, okay, QA this before we put it into production. So like you still need a software team. You just need far fewer people than you did before. But you can't replace an architect if you're building a house.
My second and kind of like my real question. So how do I, as like a software developer, software engineer, market myself to these founders and to these people that in you building your product, I can assist you in like kind of like consulting, like almost like consulting as far as like the architecture goes and making sure that they're getting exactly what they're looking for.
I mean, you should be building dope shit every day. I get a lot of questions around like, well, I'm not sure what I should do. Should I do this or should I do that? I'm like, the thing that you're going to do is the thing you're doing today, right? If you're building dope shit and people are going to find you, right? Put your projects on LinkedIn, put your projects on Instagram, put your projects on TikTok. Like, hey, I got interested in something and vibe coded this hiking app over the weekend and now it's available for the public or tested on test flight. Somebody is trying to build something that's going to be like, I need that guy, right? But you're not going to be able to convince me in any type of conversation like that you're a great builder of things. Great builders of things have a lot of broken shit that they've left around as they've built stuff, you know?
Next.
Great presentation. You did touch on healthcare, but I'm curious more on the drug discovery process, because it might take 10 years sometimes to bring drugs to the market, and we need to still do efficacy, toxicity studies for most of these medicines that we are bringing to the market. I'm curious, where do you see AI making a difference in that process?
I'm going to get really out of my depth here because I know there are people that work on this every day and I read their papers, but I'm not an expert. When I was doing research, we used animal models and animal models suck, right? We've cured cancer in animal models 50 times. It never translates. So we're talking about a lot of in silico models, the ability to actually test the effects of these compounds and model the impacts of these compounds in real time. AlphaFold is doing a ton of great work on understanding protein folding. And proteins are essentially these molecules that cause the cells to do things within the body. And so understanding how different components and structures of those proteins actually allow us to impact signaling pathways before we design that drug, I think is probably the quickest acceleration. But from my understanding, a lot of the shit in the drug discovery process is just regulatory. It's just a lot of stuff that we have to do that is just not, and I see your face, but a lot of the stuff that we have to do in that process, we simply shouldn't have to do anymore. And I'll give you an example. When I got a buddy that does structural proteins over in Boston, and a lot of what he's doing is really just a battery of, we've crystallized all these proteins, we think these are candidates for these targets, and we're going to scan through all of these candidates for these targets. And then you drill down and say, okay, this candidate has this, which has the best efficacy, et cetera, et cetera. What we can do now with AI is say, okay, how can I engineer this to get 5%, 10%, 20% more effectiveness or potency out of this particular signaler? But at that point, now the years of testing that you actually have to go through, like, are they relevant? Why are we still starting at animal trials, right? Why can't we also predict the effectiveness or the safety profile of this drug on a human, right? So I think some of those things we should be able to use models, simulations, and silica to skip some of these steps in the drug approval process. So maybe that's not necessarily drug discovery, but it's definitely the drug approval process.
Thank you very much for your presentation. My name is Bernice, and I would like for you to go over the build fast part of your presentation, the engineering workflow. I feel like companies are getting rid of engineering teams without really understanding the value in the workflow that you described. And it feels like we are only getting rid of them to hire them back again because they didn't do what you just mentioned. So what do you think about my observation, and if you can go over that part of the presentation, the workflow.
Yeah, I haven't personally seen, because I've been doing startup stuff now for like a couple of years. I haven't really seen a lot of, or been involved in a lot of layoffs that were particularly driven by AI, unless my software contributed to it, unfortunately. But in terms of our workflow, one of the things that we're finding is that what really takes shape now is rapid prototyping of the front end. So we do a lot of design-driven prototyping. Previously, you would do a PRD, you would do this whole user story. What do I want the user to be able to do, et cetera. The cool thing now is we build with vibes. So it's just like, I look at my product, I'm like, wouldn't it be cool if it did this, this, and this? We get 5 screens up, we send 5 screens to a tester or a company or et cetera, and we get immediate feedback on that. There's a number of ways that this is like improving our process, but the biggest thing is it's not, once our designer creates the design language and the component library, then we can just use Figma, right? And just come up with clickable prototypes really quickly, send that to the whole team for feedback. What works, what doesn't work, you rapidly iterate on that. And then the other thing that allows us to save our product managers a ton of time is the ability to just take a visual screen and give it to an agent that has context of your code base, and then rapidly generate the epics and stories necessary in order to not just build that product, but implement it or integrate it into your actual product with like context of how your product is built. So those are some of the major ways that it changed our workflow and really sped things up. And then also like hot fixes. We really, unless it's like a really complex hot fix, like we really effed something up, we generally are letting Devin fix it. If it's like, oh, we got an alert because, you know, our Postgres database, like server connection keeps dropping out. Like, okay, Devin, go fix that, right? So I don't know if we would hire at this point any junior devs. You generally, that's the scary part, is you just don't need them. You need them to get to senior devs. And I don't think anybody solved that problem. But right now, my team only consists of leads and seniors. And I think that's probably going to persist. And so it is going to be hard for folks getting started in software engineering. But I think what it's going to do is, as a junior, you should just really quickly scale up to a senior, because you should be able to build 10 times the number of projects as you did before with the help of AI. Sorry.
Good afternoon. Well, I'm a 79-year-old retired financial services entrepreneur. Do a lot of work in the community here. I know some folks are here. I don't know much about AI. My kids are heavy into it. They're doing well. But I do recognize something I got here this afternoon, and that is, this is an opportunity. I see this is an opportunity. As I was sitting here, I said, this opportunity, the brilliance that's in here should be connected with the top 10 HBCUs in the country, should be connected with a group of professional athletes who have got lots of money, that $1 billion fund could be created to take the top 10 of our Black talent, engineers, marketing, developers, and create something that this country actually is hungry for, whether it's in Detroit, Philly, where I'm from, wherever. All of us recognize that we need the leadership to create a dynamo that drives this AI engine. But not only that, the political, the construction, the housing, the schools, and that we control. Big task. Not only that, I've traveled around the world. There's people in Uganda, Ghana, all over, a lot of money. They're looking for something like this but they want it to be real. Big challenge. I don't know how to do it, but I know if it's done, everybody here would like to have some stock in that company. Yeah. Yeah. And so I told a friend of mine the other day, I said, you know, there's a few people here that know me. They know I've been a very strong Black activist in this community. I made my money. I could have made more money if I'd have been a little more quiet, but that's just not how I've been. So what I said to my friend was, we Black folks have got to stop waiting for somebody to come and do something for us. It ain't gonna happen. They ain't coming. They are not coming. Okay. Okay. So we have to do it ourselves, control it, and we need the brightest and the smartest. I'm convinced we have enough Black men and women. And I'm not being disrespectful to, because I lived in Asia for 10 years. I love everybody, but I love my people the most. So we need to control $1 billion operation, which could come together fairly quickly with the brightest, the smartest minds that can take this thing global. I guarantee you, there's people in Rwanda, Paul Kagame, Kenya, Nigeria, they're saying, yeah, we'd like to be able to be on this AI thing. We just don't know how to do it. And we don't know who to trust. So I don't know you guys, but I know Mark. I've been watching him for a long time. I know he knows what he's doing. So Mark,
I taught Mark Williams.
take that, create that vision. Create that vision, take it national, get the top 10 Black, HBCUs, top talent there. Black folks with money in this country, but they don't know what to do with it. And they don't trust people. So that's your job.
Thank you. Yeah, if I could just respond to that, I know we'll end. Mark and I was in the Navy. I don't even remember what year this was. I was in the Navy stationed up the street. And me and Mark were trading the Facebook IPO. You remember that? I think that was like the first thing we traded together. I lost money. We didn't have access. We couldn't get in at the pre-IPO price. And I didn't hold. If I had just held, we bought like the day, it was like $39.
No, we came in at 33.
We came in at 33.
Yeah.
Facebook. Buying that.
But then it was like the day after.
Oh, it dropped, but it even dropped to 19. And in retrospect, it was like, buy more.
Bruh.
Buy more. It's Facebook.
Should we actually tell this story? Because I don't think a lot of people actually know the full story.
That's how old I am that I bought the Facebook IPO. And
you know what? Fuck it. Let's do it. All right. So when we did this journey, you and I were like, let's hold on.
Yeah.
But we had a consortia group of folks that were with us. And when they saw what was happening in the market, and I remember I called you because everybody was like calling me and just like, I want out. And I'm like, no, stay. And they didn't want to stay.
Nobody wanted to stay. And I remember like within a month, it was a 7.
Exactly. And then from there, bruh.
Yeah. Yeah, man. Just
so it's possible.
We could have been rich.
We are rich.
Richer.
Yeah.
To the point, we got to do it with the top 11 students because the talented 10th thing is a little bad at this point. Skeegee's leading the way on this. Skeegee is killing it. Morehouse is killing it. The schools, the alumni of the schools are killing it, but the people at these institutions will not return a phone call.
They wanted me to join the board, and then when I didn't want to play puppet, they didn't call me back.
When you don't write them a check, they stop calling. So I would love to work with HBCs. I've taught at Spelman, like during the pandemic. I stepped in and taught a data science class for one of their enrichment programs.
Yeah.
For students that want to go to a PhD program. But just, I don't know, it's a cultural thing, man.
Should the come up series curriculum go to HBCUs?
We need a pressure campaign. Get on their Instagram and force them to call us back.
Hashtag call us.
Well, thanks everybody.
Thank you.
It's incredible.
Yo, if history could just talk. Wow. First things first, shout out to Mr. Tyner. That gentleman that was the last speaker, the gentleman that was asking the question. I don't know if I'm gonna get in trouble for this, but he was very heavy within insurance and helping and making sure that a lot of small and medium-sized businesses and even large businesses got insured. And he and I, a lot of times we would trade information and knowledge as it pertains to what is it I was learning as a young Black man, and also him giving me his wisdom as a gentleman who's, you know, been a titan in the arena. Some of it which stuck for sure, and some of my young hubris also let it fall to the wayside until life teaches the lesson and you remember the lessons of those conversations. The reason why I'm saying this is because, like I said, this means something to me. You know, I hope you guys understand that. You know, it's easy to put together like an event and show up and, you know, have, you know, maybe get a bunch of celebrities on stage and everything else. But, you know, the one thing that I've always wanted to give to each and every single one of you was value. That if by chance, if something, God forbid, happened to me, the journey could still continue, and that the culture that, you know, if I had to step away or leave it behind, that you can continue and you can continue to flourish and pass it on and pass it on. So, you know, having individuals like Antwoine and having individuals like Jimmy Lee, and, you know, some of the other speakers that you're going to hear for the remainder of this summit, you know, it really means something. You know, those are your celebrities. Those are your heroes. You know, I just feel fortunate to just be able to be in a space in which that we can celebrate them, we can learn from them, we can also grow with and also from them. So thank you, Antwoine, to into the distance. And we're gonna conclude until 5, so that gives you guys like about a 30-minute break. And prepare for a pop out. Is that fair? All right. So I'll see y'all in 30 minutes.
Believe in, and also the community that he's building with a number of other people here. And we're also here to support the founders and the innovators and also the investors and to contribute and to give back to the local ecosystem and the community. So thank you, Mark, for that. So for those who are not familiar with Wilson Sonsini, we're a full service law firm. We're headquartered in Silicon Valley, and we have been in this business since 1960s. And we have worked with some of the leading cutting edge technology companies in both high tech and also life sciences. So that includes Google, OpenAI, and we've taken companies public through many mergers, acquisition, and IPOs. And we're a full service law firm. So we